Assalamualaikum warahmatullahi wabarakatuh. So now I will continue with the example of synergy. So I will show you how to calculate the synergy amount or value. Okay, for the first example, alright, so look at the question. So the question here giving you the information for shares outstanding or issued and the price per share for both firms. And then the company or the expectation here is that the value of the combined firm is going to be 850 million ringgit. So that means in this case it is expected that, right, the value of the combined firm, let's say the Amber Heart is the acquiring company, okay, and Amber Heart is the target company. Okay, so if M and Amber Heart combine, alright, let's say the value of combined firm here named as MN. Alright, and then it is expected that the value of the combined firm is going to be 850 million ringgit. So now, how are we going to calculate this value of combined firm? I think it's already given to you in the previous video that the value of the combined firm equals to value of individual firm, right? The current value of the individual firm, M and N, okay, and plus the synergy. Alright, so this is what we want to find out. So we just rearrange the formula. Synergy, alright, equals to the value of the combined firm, you minus the current value of M, and you minus the current value of N. So how are we going to find out the current value of each firm? So here we have to go back to the basic formula. So how is it? The current value of M equals to B plus S, right? So this is what we did in the last chapter, capital structure. So since it is assumed that there is no debts outstanding, right, in each firm, so this means that two companies here are relying on equity only. So that means there is no debt, so B equals to 0. So straight away you put here 0 and you plus the value of equity. So how are you going to find out the S value of equity? So that means the market price per share, okay, and you multiply by the number of shares issued or outstanding in each firm. So here we are doing for M. So therefore, current price for M is 6 ringgit. You multiply by 100 million ringgit. So therefore, equals to 600 million ringgit. So this is the value of the first company. Okay, now we calculate the current value of N, the target firm. Okay, that means same formula, P plus S, and no debts, 0. And what is the price of the share for this target company? 3 ringgit. Okay, so 3 ringgit multiplied by the number of shares outstanding, 50 million shares, and therefore equals to 150 million ringgit. So this is the current value of N. Now we can find out the synergy. Right, so synergy, let's go back to this formula. Okay, the value of combined firms given in the questions, 850 million, you minus 600 million, right, this one, and you minus 150 million, this one. Therefore, you will get 100 million ringgit synergy if you are using this formula. Okay, if you go to the next question, right, now we go to the next example, same example actually, but then different information. So now let's say, right, Amber Heart expects that there will be an increase in after-tax cash flow, alright, of 800,000 ringgit perpetuity. Alright, so careful, perpetuity, that means infinity. Alright, that means we do not know how long this 800,000 ringgit going to be earned, okay, after the acquisition. So this is due to the cost saving and increase in sales revenue. Assume that there is no debts outstanding in each firms again, and then here calculate the present value of synergy using the discount factor of 10%. So this situation, alright, where the increase in cash flow, perpetuity, that means infinity. Okay, we do not know how long, so therefore we can use this formula to calculate the synergy equals to changes in the cash flow after tax, you divide by R only. So that means 800,000 ringgit, you divide by RU, this is your R, okay, 0.1. So therefore equals to 8 million ringgit.